ready to uncover the altcoins that could explode by 2026. While Bitcoin grabs the spotlight, the real game changers are often found in the altcoin market. These projects are redefining what blockchain can do, and if you spot the right ones early, the upside is massive. This isn't about hype or quick flips, it's about finding the foundational tech of tomorrow. I'll break down 5 altcoins I'm watching, explain what makes them unique, and why they could be major players by 2026. Remember, this isn't financial advice. Crypto is risky, so do your own research. Let's dive in. First up, let's talk about the king of altcoins, Ethereum. It's the second largest cryptocurrency by market cap, and for good reason. Sure, it's not a hidden gem, but its story is far from over. In fact, Ethereum's journey is just entering a new chapter, with innovation and adoption accelerating at a pace we've never seen before. Ethereum pioneered smart contracts, which are self-executing agreements that run on the blockchain. This breakthrough unlocked entire new industries: DeFi, NFTs, DAOs, and countless decentralized applications that have changed how we think about finance, art, and governance. Its network effect is unmatched. Developers and users flock to Ethereum, reinforcing its dominance. Every new project, every new user, makes the ecosystem stronger and more valuable. For years, high fees and slow speeds were a problem, making Ethereum difficult to use for everyday transactions. But that's changing fast, thanks to a wave of upgrades and new technologies. The merge was a historic upgrade, shifting Ethereum from energy-hungry proof of work to eco-friendly proof of stake. This slashed energy use by over 99%, making Ethereum far more sustainable and attracting serious institutional interest. Layer 2 solutions like Arbitrum, Optimism, and Polygon now handle transactions off-chain, making Ethereum faster and cheaper. These scaling solutions are unlocking new possibilities for mainstream adoption. The Dencun upgrade and proto-danksharding are driving costs down even further, making microtransactions and new business models viable for the first time. Imagine using Ethereum apps as easily as any web app, but with all the benefits of decentralization, privacy, security, and true ownership of your assets. Institutions are taking notice. BlackRock, Fidelity, and other financial giants are launching Ethereum ETFs, making it easier for traditional investors to get exposure. Regulatory clarity is improving, and big money is flowing in. As governments and regulators provide clearer guidelines, confidence in Ethereum's future only grows. ETH's supply is also shrinking. EIP 1559 burns a portion of every transaction fee, making ETH potentially deflationary. This means that over time the supply of ETH could actually decrease, increasing its scarcity. So, you have rising demand, falling supply, and a maturing ecosystem. It's a powerful combination that's hard to ignore. Ethereum isn't just another altcoin, it's the backbone of Web3, powering everything from decentralized finance to digital identity and beyond. Its developer community is massive, with thousands of contributors worldwide. Each upgrade makes Ethereum more scalable, more secure, and more deeply integrated into global finance. While new chains compete for attention, Ethereum is expanding the entire pie, growing the crypto ecosystem for everyone. It's the settlement layer for the digital economy, where value moves seamlessly and securely across borders and industries. As the crypto space grows, so does the value of Ethereum's foundation. It's the infrastructure on which the next generation of the internet is being built. By 2026, I see Ethereum as a core holding for any serious crypto investor. Its resilience and adaptability make it a must-have in any diversified portfolio. Don't sleep on the king. Ethereum's leadership is hard-earned, and its momentum is only building. The next few years could see Ethereum cement its place as the most reliable and powerful platform in crypto, setting the standard for what's possible in blockchain technology. If you're building a portfolio for the future, ETH deserves a spot. It's not just an investment, it's a stake in the future of the internet. The story isn't over, it's just getting started. Ethereum's best days may still be ahead. Let's move to the next contender. Next, let's talk Cardano and its token, ADA. Cardano is the scientific blockchain. Every upgrade is peer-reviewed and rigorously tested before launch. Founded by Charles Hoskinson, a co-founder of Ethereum, Cardano's slow and steady approach is all about security and reliability. Critics called it a ghost chain, but since smart contracts launched, its ecosystem has quietly grown. Cardano's EUTXO model brings predictable transaction fees, no more surprise gas costs. Its roadmap is clear: After decentralization and smart contracts, the focus is now on scaling and governance. The Voltaire era will introduce on-chain voting and treasury management, making Cardano truly decentralized. Sidechains and scaling upgrades aim to put Cardano on par with Visa in transaction capacity. Real-world adoption is happening, especially in developing nations, like digital IDs for millions of students in Ethiopia. Cardano's methodical approach means fewer hacks and more trust, key for governments and institutions. By 2026, Cardano could be one of the most decentralized and resilient blockchains out there. Its focus on real-world utility and community-driven governance sets it apart. If you want a project playing the long game, Cardano is worth a close look. The market may soon reward its patience and rigor. ADA's price could reflect that shift. Let's see who's next in the race. 18. If Cardano is the tortoise, Solana is the hare, built for speed. Solana's proof-of-history innovation lets it process over 65,000 transactions per second for a fraction of a penny. That's faster than Visa, and it's made Solana the go-to for high-frequency apps, trading, gaming, and social media. Yes, Solana had outages and early centralization concerns, but the team is fixing these with upgrades like FireDancer, a new validator client for more resilience and decentralization. As hardware gets cheaper and software matures, Solana's network is stabilizing. Its ecosystem is booming. Deep-in projects like Helium and HiveMapper, plus a thriving NFT and meme coin scene, are driving massive user growth. Solana Pay is even challenging legacy payment rails with instant, near-zero-fee crypto payments. Institutions are watching closely. Solana's relentless focus on performance has carved out a unique niche. By 2026, it could be the backbone for a new generation of high-speed, decentralized apps. SOL's value could soar as the network matures and adoption grows. If you want exposure to the fastest blockchain, Solana is a top contender. Let's keep moving. Imagine a future where blockchains don't compete, but collaborate, where hundreds of networks work together seamlessly. What if the next evolution of the internet isn't about a single blockchain dominating, but about many, each with its own strengths, all interconnected? That's the bold vision behind Polkadot. Polkadot, powered by its DOT token, is often called a blockchain of blockchains. It's designed to connect specialized blockchains, called parachains, so they can interoperate securely, share information, and transfer assets without friction. Think of it like the European Union for blockchains. Each parachain is sovereign, able to set its own rules and innovate independently, but they all benefit from shared security and communication through the Polkadot relay chain. This structure encourages diversity and experimentation, while maintaining a strong, unified foundation. This approach solves the fragmentation problem that plagues many blockchains today. Moving assets or data between chains becomes seamless, trustless, and efficient. No more isolated silos or complicated bridges. Projects compete for parachain slots through innovative auctions, locking up DOT tokens and rallying their communities for support. Winning a slot means access to Polkadot's shared security and network effects. This pooled security model allows new projects to focus on building great products, rather than spending years and resources bootstrapping their own blockchains from scratch. It's a launchpad for innovation. With Polkadot 2.0, the system is set to become even more flexible. Projects will be able to buy block space as needed, scaling up or down based on demand, making the network more dynamic and accessible. The Polkadot ecosystem is already thriving and diverse. Moonbeam brings Ethereum compatibility, Astar enables multi-chain dApps, Acala powers DeFi, and dozens more projects are building unique solutions on Polkadot. DOT isn't just a token, it's the lifeblood of the network. It's used for governance, staking, and bonding, directly tying its value to the health and growth of the entire Polkadot ecosystem. As more parachains launch and more DOT is locked up for auctions and staking, demand for DOT rises while available supply tightens, creating a powerful economic flywheel. Polkadot is betting big on a multi-chain future, aiming to become the communication protocol, the TCP/IP of Web3, connecting blockchains just like the internet connects computers. By 2026, as blockchain specialization accelerates, Polkadot could be the essential glue holding this new decentralized world together, enabling collaboration at a scale never seen before. DOT could emerge as a core asset for the next phase of crypto, standing alongside Bitcoin and Ethereum as a pillar of the new Internet of Value. Now let's turn to our final pick and see what the future might hold. Our final pick isn't a blockchain itself, but rather the crucial middleware that makes blockchains truly useful, Chainlink, along with its link token. While blockchains are powerful, they're like isolated islands without a way to interact with the outside world. Chainlink is the technology that builds the bridge between these islands and the vast ocean of real-world data. Blockchains can't access real-world data on their own. This is known as the Oracle problem. Without a secure way to bring in external information, smart contracts are limited in what they can do. Chainlink solves this by acting as a trusted gateway, connecting blockchains to everything from financial markets to weather data. Chainlink is a decentralized network of independent nodes that fetch, verify, and deliver data to smart contracts. These nodes provide reliable feeds for prices, weather, sports scores, and much more, ensuring that smart contracts can react to real-world events with accuracy and security. Chainlink has become the industry standard for decentralized oracles. Most of the top DeFi projects rely on it for their data needs. Its network effect is massive, with more integrations and partnerships than any other Oracle solution. As more projects adopt Chainlink, the network becomes even more secure and reliable, which in turn attracts further adoption. This positive feedback loop strengthens Chainlink's position at the heart of the blockchain ecosystem. But Chainlink isn't just about price feeds. Chainlink VRF delivers provable randomness for blockchain games and NFTs, ensuring fairness and transparency. Chainlink automation allows smart contracts to be triggered by real-world events, opening up new possibilities for decentralized applications. The Cross-Chain Interoperability Protocol, or CCIP, enables apps to send messages and tokens across different blockchains. This makes Chainlink the backbone for cross-chain communication, helping to unify the fragmented blockchain landscape. With link staking, holders can now help secure the network and earn rewards. This not only incentivizes participation, but also adds a new layer of security and demand for the link token itself. As real-world assets like real estate, stocks, and even commodities move on-chain, secure and reliable data feeds become absolutely essential. Chainlink is the infrastructure making this new era of tokenized assets possible, ensuring trust and transparency. By 2026, as Web3 matures and the integration of real-world data accelerates, the demand for Chainlink services could skyrocket. The more the world connects to blockchains, the more vital Chainlink becomes. Investing in Link isn't just a bet on one blockchain, it's a bet on the growth of the entire smart contract economy, across every chain and every industry that will use decentralized data. Chainlink's dominance is only growing, and its role as the connective tissue of the blockchain world is becoming more apparent every day. If you believe in a future where blockchains are seamlessly connected to real-world data and where decentralized applications can truly transform industries, then Link is a must-watch project for the years ahead. There you have it, 5 altcoins with huge potential heading into 2026 and beyond. From Ethereum's foundation to Cardano's rigor, Solana's speed, Polkadot's interoperability, and Chainlink's data services, each tackles a key piece of the Web3 puzzle. Remember, potential comes with risk. Crypto is volatile, so do your own research. Use this as a launchpad, read white papers, join communities, and dig deep. The best investors are the most informed. Stay curious, stay skeptical, and keep learning. If you found this helpful, hit subscribe for more crypto insights. See you in the next video. Want to find the next 100x crypto gem for less than $1? Today, I'll reveal 4 altcoins under $1 that could change your financial future. These aren't just cheap coins, they're backed by real technology, major partnerships, and explosive potential. I've done the research so you don't have to. We'll break down what makes each project unique, why they're undervalued, and why this dip could be your last chance to buy in cheap. This isn't just another list. This is your blueprint for spotting undervalued assets. And if you stick around to the end, I've got a bonus pick that's even more under the radar. Grab a notebook and get ready. We're diving into 4 altcoins under $1 that could make you a fortune. Let's get started. First up is VeChain, VET, a project revolutionizing global supply chains. VeChain uses blockchain and smart chips to track products from creation to consumer, fighting counterfeits in luxury goods, food, and pharmaceuticals. It's already working with giants like Walmart China, BMW, and H&M. The VeChain Thor blockchain uses a 2-token system, VET and VTHO. Hold VET, and you generate VTHO for transaction fees. The team is led by Sunny Liu, former CIO of Louis Vuitton China, and stacked with enterprise veterans. VeChain isn't just a crypto project, it's solving trillion-dollar problems. Despite all this, VET is still under $1. Every product scanned is a transaction on VeChain Thor. Imagine the scale as more companies join. VeChain is also tackling carbon tracking, helping companies manage their environmental impact. Scan a QR code and see a product's entire journey. This transparency builds trust. VeChain is a key player in anti-counterfeiting and sustainability. Buying VET under $1 is like buying Amazon in the 90s, a rare opportunity. As adoption grows, so will the demand for VET and VTHO. VeChain is a sleeping giant. Don't sleep on this one. Let's move to the next gem. Next up is Stellar, XLM, a veteran project with a mission to make money move as easily as email. Sending money across borders is slow and expensive. Stellar fixes this with near-instant ultra-cheap transactions. The Stellar network settles payments in seconds for a fraction of a cent, revolutionizing global finance. Stellar's goal is financial inclusion, connecting the world's financial systems so anyone can access low-cost services. Billions of unbanked people can now save, send, and receive money with just a phone. But this isn't just a charity. Stellar has major partnerships, including IBM and MoneyGram. IBM WorldWire uses Stellar for real-time cross-border payments, directly competing with legacy banking. MoneyGram lets users convert cash to digital assets on Stellar, bridging the gap between cash and crypto. This is live and operational, not just a future plan. Stellar uses the Stellar Consensus Protocol, fast, scalable, and energy efficient. It's built for high-volume, low-cost transactions, perfect for remittances and micropayments. XLM is still under $1 because Stellar isn't flashy. It's the essential infrastructure powering the future of finance. The network allows anyone to create digital assets, making it ideal for stablecoins and tokenizing real-world assets. USDC, a major stablecoin, is live on Stellar, a huge vote of confidence. The remittance market alone is worth hundreds of billions. If Stellar captures even a small share, XLM demand will skyrocket. XLM is used for transaction fees and as a bridge currency, giving it real utility. The Stellar Development Foundation is investing in new projects, growing a vibrant ecosystem. They're playing the long game, building a robust, sustainable network. As regulation becomes clearer, compliant projects like Stellar will be the biggest winners. Stellar is building bridges, not burning them. XLM is a bet on a faster, cheaper, more inclusive global financial system. The fundamentals are strong, and the partnerships are real. The opportunity to buy XLM under $1 won't last forever. If you want exposure to the future of payments, Stellar is a top pick. It's a quiet giant, ready for a comeback. Don't overlook this essential piece of crypto infrastructure. XLM is a smart, long-term play. Let's check out our next altcoin. Ready for something even faster? Third on our list is Harmony, the blockchain for those who love Ethereum's potential but hate its high fees and slow speeds. Harmony is built for speed, scalability, and low cost, using sharding to process transactions in parallel. Think of it as adding more lanes to a blockchain highway. Harmony achieves 2-second finality and fees that are a fraction of a cent. This makes it perfect for dApps, games, and high-frequency trading that just aren't feasible on slower networks. Harmony has a $300 million ecosystem fund, attracting developers and fueling rapid growth in DeFi, NFTs, and gaming. Its cross-chain bridges let you move assets seamlessly between Harmony, Ethereum, and Binance Smart Chain. Developers can easily port Ethereum dApps to Harmony for faster, cheaper performance. The team is led by Stephen Say, a former Google and Apple engineer and packed with top-tier talent. Harmony did face a major setback with a security breach in 2022, but the team responded with transparency and is rebuilding stronger. The market has overreacted, leaving One undervalued despite its strong fundamentals. One is used for staking, transaction fees, and governance, giving it multiple layers of utility. As more dApps and users flock to Harmony, demand for One will rise. Blockchain gaming is a huge growth area. Harmony's speed and low fees make it ideal for play-to-earn and NFT games. The fundamentals are solid sharding tech, fast finality, low fees, a growing ecosystem, and cross-chain compatibility. Harmony is a high-risk, high-reward play, but the upside is massive if it delivers on its vision. The core technology is sound, and the team is committed to long-term growth. If you're looking for an Ethereum alternative with real potential, Harmony deserves a spot on your watch list. The current price is a rare opportunity for early investors. Harmony is quietly building the future of Web3. Don't let past setbacks blind you to future potential. One could be a major player in the next wave of crypto adoption. The fundamentals are there, the market just needs to catch up. If you want exposure to the next generation of dApps, Harmony is a smart bet. The risk is real, but so is the reward. One is a play on speed, scale, and the future of decentralized apps. Let's move to our final pick. Ready for something truly revolutionary? Here it is. Last up is HOT, the most ambitious project on this list, aiming to reinvent the internet itself. Holo isn't just another blockchain, it's a peer-to-peer hosting platform built on Holochain, a radically different architecture. Instead of a single global ledger, each user maintains their own ledger, making the network infinitely scalable. The more people use Holochain, the faster and more powerful it becomes, the opposite of most blockchains. Holochain apps, HAPs, run on users' devices, but Holo bridges them to the regular web through a network of hosts. Hosts lend computing power to run HAPs and get paid in Holo Fuel, a currency designed for billions of microtransactions. The HOT token you can buy now will be swappable for Holo Fuel once the network is live. Anyone with spare computing power can become a host, earn Holo Fuel, and help power a decentralized, community-owned version of AWS. The potential market is huge. Cloud computing is a multi-billion-dollar industry dominated by a few giants. Holo aims to disrupt this by offering a cheaper, more resilient, user-controlled alternative. Your data stays with you, not on a corporate server. This is the core promise of Web3. True user control and privacy. Holochain enables serverless apps, censorship-resistant social media, and platforms that can't be shut down. The team, led by Arthur Brock and Eric Harris Braun, has decades of experience in distributed systems. Holo is still in development, making it a high-risk, high-reward play. If the network goes live and captures even a small slice of the cloud market, HOT's value could soar. Buying HOT is a bet on a paradigm shift in how we use the internet. It's a long-term play for those who believe in a decentralized, user-owned web. The vision is bold, the tech is unique, and the upside is massive. If you want exposure to the future of the internet, Holo is a project to watch. The risk is high, but so is the potential reward. HOT is a claim on the future of decentralized hosting. If Holo succeeds, early believers could see life-changing returns. This is the kind of moonshot that makes crypto exciting. For those who want to bet on the next internet, HOT is your ticket. The journey is just beginning. Let's wrap up with a quick recap and a bonus tip. Here's what you need to know. There you have it, 4 altcoins under $1 with massive potential: VeChain, Stellar, Harmony, and Holo. Each project offers real-world utility, strong teams, and huge growth opportunities. Remember, this isn't financial advice. Crypto is risky, so always do your own research. If you found value in this video, smash that like button and subscribe for more deep dives. Drop your favorite low-cap gems in the comments. I read everyone. And for those who stayed to the end, here's your bonus. Check the pinned comment for a hidden gem under 10 cents. Don't miss out on this exclusive pick. Thanks for watching, and I'll see you in the next video. Good luck hunting for your next crypto gem. Something strange is happening with Bitcoin. The cryptocurrency that once seemed unstoppable is now facing an unprecedented crisis. For years, investors followed a predictable calendar, a rhythm that seemed guaranteed to make money. The cycles were almost like clockwork, giving traders a sense of security. But in the last few months, that calendar has been torn to shreds. The once reliable patterns have disintegrated, leaving investors scrambling. Bitcoin just did something that sent a shockwave through the crypto world. After a massive run-up, it suddenly dipped below the crucial $100,000 level. This was a psychological barrier that many believed would hold. All the gains from 2025 were wiped out in a flash. The rapid decline has left even seasoned investors in disbelief. This wasn't supposed to happen. Not now. Not like this. The market was supposed to be in a bullish phase, riding high on optimism. The old rules said the party should just be getting started. Instead, we're seeing fear. Investors who were celebrating just weeks ago are now in a state of panic. The charts are flashing warning signs we haven't seen in years. A dreaded pattern called the death cross just appeared. This is a bearish signal that has historically preceded major downturns. It's a technical signal that often comes before a major crash, like a check engine light blinking furiously on the freeway. Traders are now on high alert. The market's mood has turned ice cold overnight. What was once a hotbed of activity is now eerily quiet. Big money is running for the exits. Institutional investors who once propped up the market are now pulling out. For 3 weeks straight, more money has been pulled out of crypto funds than put in. This exodus is unprecedented and alarming. These are large funds and institutions, not just small-time investors. Their exit signals a lack of confidence in the market's future. Their sudden departure has left a giant hole, making experts nervous. The market is now struggling to find its footing. The confidence that defined the market just months ago has evaporated. Investors are now questioning the very fundamentals of Bitcoin. This isn't just a small correction, it feels like a fundamental shift in how Bitcoin behaves. The volatility is unlike anything we've seen before. The old playbook is out the window. Strategies that once worked are now obsolete. Top experts warn the most reliable pattern in Bitcoin's history is broken. The predictable cycles that traders relied on are no longer valid. The era of easy, predictable gains may be over for good. The future of Bitcoin is now more uncertain than ever. To understand the panic that gripped the market, you first need to know about the old rulebook, the legendary 4-year cycle that shaped Bitcoin's history. For more than a decade, Bitcoin's price moved in a surprisingly predictable rhythm, almost like clockwork, all tied to a unique event called the halving. This event was the heartbeat of the entire crypto market, and everyone watched it closely. Every 4 years, the reward for mining new Bitcoin is cut in half, instantly slowing the creation of new coins. This wasn't just a technical tweak, it was a deliberate design to make Bitcoin more scarce over time. This sudden supply shock made existing Bitcoin more scarce and, in theory, more valuable. It was like finding out there's less gold in the world than everyone thought. The halving acted like a starting gun for a massive bull market, setting off a chain reaction of excitement and speculation. The pattern was simple but powerful: halving, explosive bull run, brutal bear market, then a long, quiet period of accumulation. This cycle repeated itself with almost uncanny precision year after year. Investors used this cycle as a map, timing their moves, buying big during the accumulation phase and selling near the euphoric peak, hoping to maximize their gains. It took much of the guesswork out of a notoriously volatile asset, giving traders a sense of control in an unpredictable world. Following the cycle felt almost like having a cheat code for the market, an edge that others didn't have. This sense of predictability made Bitcoin wildly popular. It wasn't just chaos, there was a method to the madness, a logic that anyone could follow. The halving created a supply squeeze, and human psychology, greed, fear, and hope did the rest, fueling the cycle. FOMO would kick in after each halving, pulling in waves of new buyers and pushing prices to parabolic heights as everyone rushed to get in. Then, after the peak, came the inevitable panic selling and a dramatic crash, wiping out fortunes in a matter of weeks or months. It was a simple, almost foolproof model for those who followed it closely. But as we'll see, that certainty didn't last forever. The 4-year cycle wasn't just a theory, it was a pattern that played out in real time, over and over again, almost like clockwork. For years, it was the closest thing to a guarantee in the wild world of crypto. After the 2012 halving, Bitcoin soared from just $12 to over $1,100, capturing headlines and imaginations worldwide, before crashing back down to $200, leaving many stunned. The 2016 halving brought another epic run. Prices climbed from the low hundreds to nearly $20,000 by late 2017, only to tumble all the way down to $3,000 in the brutal bear market that followed. the 2020 halving, same story, but on an even bigger scale. Bitcoin rocketed from $9,000 to a jaw-dropping $69,000 in 2021, then crashed to $16,000, shaking the faith of even the most seasoned investors. 3 halvings, 3 massive bull runs, 3 devastating crashes. The pattern was so consistent, it felt almost inevitable. This track record built a near-religious confidence among investors and traders who saw the cycle as a guiding light in an unpredictable market. Analysts created models like stock to flow, projecting future prices into the hundreds of thousands, and these models became gospel for many in the space. The entire industry, traders, funds, even casual investors, structured their strategies around this 4-year timeline, planning moves years in advance. The expectation for the post-2024 halving was for an even bigger explosion, $150,000, $200,000, or more. Hype and hope reached new heights, but that's when the story started to change. The market began to behave differently, and cracks appeared in the once reliable pattern. The cycle's reliability had made it the one constant in a chaotic market, a rare anchor for those seeking order in the storm. Investors believed they could set their watches by it, timing their entries and exits with near-mechanical precision. But now the pattern is breaking down. The signals that once seemed so clear are starting to blur. The market is no longer following the script. Volatility and uncertainty have returned with a vengeance. The old certainty is gone, and investors are left wondering if the clockwork cycle has finally run out of time. The current cycle, starting after the April 2024 halving, looked normal at first. Bitcoin broke its old all-time high before the halving. A first, but the explosive rally that was supposed to follow never materialized. Instead, the price chopped around, with sharp moves in both directions. A new peak in October 2025 at $126,000 was quickly met with a 21% correction. The smooth upward trajectory of past cycles was replaced by a jagged, uncertain mess. On-chain indicators that once signaled overheated markets stayed quiet, even at new highs. This suggests either more room to run, or that the indicators themselves are now unreliable. The recent plunge below $100,000 in the death cross are the biggest cracks yet. The map everyone was using is leading them off a cliff, and panic is palpable. What broke the cycle? The arrival of Wall Street. In early 2024, the US approved spot Bitcoin ETFs, letting anyone buy Bitcoin like a stock. Giants like BlackRock and Fidelity launched their own ETFs, vacuuming up over $64 billion in Bitcoin. This demand front-ran the halving, pulling the bull market forward. But ETF inflows are a double-edged sword. When sentiment turns, outflows can be brutal. Recently, $660 million was pulled out in just 6 days. These big players aren't long-term hodlers. They react to macro data and risk. Their presence ties Bitcoin to the traditional financial world. Now Bitcoin's price is subject to the same forces as stocks and commodities. The simple, self-contained 4-year cycle couldn't survive this transition. The market is fundamentally different. The old rules no longer apply. If anyone was the high priest of the 4-year cycle, it was Michael Saylor. As CEO of MicroStrategy, he bet his company on Bitcoin. But even Saylor now says the 4-year cycle is dead. The halving supply shock is now just a drop in the ocean compared to ETF flows. Daily trading volumes from institutions dwarf the impact of the halving. The market is now driven by mega finance actors, not miners and retail. Relying on the old pattern is, in Saylor's view, a recipe for disaster. He's even structured his company to survive a 90% crash. The captain of the biggest Bitcoin ship is preparing for hurricane-force winds. When the ultimate bull says it's time to be cautious, you should listen. While Saylor declared the cycle dead, veteran trader Peter Brandt offered an even starker warning. In October 2025, as Bitcoin hit $126,270, Brandt pointed to a bearish, broadening top pattern. This often signals the end of a bull run and the start of a major decline. Brandt warned the October peak might be the high for this entire cycle. The ETF inflows may have pulled the cycle forward and ended it early. The sharp rejection from the October high fits Brandt's scenario perfectly. The market is behaving as if a major top is already in. While many dreamed of $200,000 Bitcoin, the party may have ended while no one was looking. Not everyone has given up hope. Some analysts argue this is just a mid-cycle consolidation, a long, choppy pause before the next leg up. They point to quiet on-chain indicators as evidence the true top hasn't arrived. Some, like Plan B, suggest the cycle is lengthening, with a peak possibly years away. But these voices are now in the minority. The overwhelming consensus is that the old patterns are broken. Relying on hope is looking riskier by the day. The 4-year cycle is dead. The easy map to crypto riches is gone. You can't just buy after a halving and wait to get rich. The market is now more sophisticated, and so must you be. Institutional flows, Fed policy, and global economics now drive Bitcoin. You need to understand the broader economy, not just crypto news. The buy and hold for the cycle approach is now risky. Dollar cost averaging is a smarter strategy to manage volatility. The days of guaranteed 10x gains may be over. Bitcoin is now a mature, global asset class. This brings legitimacy, but also strips away the simple, explosive predictability of its youth. The training wheels are off. For those who adapt and stay cautious, opportunities remain, but don't expect it to be easy.